Yes, yes, a very good morning to all of you. Right, so we have completed with our discussion regarding the 21 clauses of the CARO 2020, right, in which we started first with the applicability of the CARO, and then one by one over a period of 3 sessions, we could complete with all the 21 clauses of the CARO. Like first we saw clause 1 to 6, right, then after that we saw the clause 7 to 14, and then after that the clause 15 to 21, right. So clause 15, it was regarding the non-cash transactions, right? So what is the auditor required to report under clause 15? Okay, whether the company has entered into any non-cash transaction. If yes, then whether it has complied with the provisions of section 192 of the Companies Act 2013. So many clauses of CARO are such, wherein you require to check the compliance with the sections of the company law, right? So whether the company has entered into any transactions with the directors or the persons connected with the directors. If yes, then whether the provisions of section 192, that is approval of shareholders in general meeting, also the approval of shareholders in the general meeting of the holding company, right? Then also the notice of the resolution, then the valuation to be done by registered valuer, and so, right? So one, you need to check have they entered, and then you need to check the compliance with section 192. Okay, right. Then after that we came to clause 16, which was regarding the registration with the RBI and the NBFCs, right? So what did we say? Under clause 16, we have the ABCD, right? So A, whether the company is required to be registered under section 45IA of the RBI Act. If yes, then whether the registration has been obtained, right? So then we went to NBFC. Okay, when are you required to get yourself registered with the RBI, right? So we said for that you need to clear the 50-50 test. What is the 50-50 test? At least 50% of your gross income should be income from the financial assets, and at least 50% of your total assets should be the financial assets, right? So if you fulfill both these conditions, and then you have to maintain the minimum net owned funds of the 10 crore, right? Then it says you are required to get yourself registered with the RBI. So you need to obtain a certificate of registration, right? So whether the company is required to be registered under section 45IA, and if yes, then whether the registration has been obtained is what you need to report. Then is 16B. What does it say? Whether the company has conducted any NBF, that is any non-banking financial, or any HFA, that is any housing finance activity, without a valid certificate of registration, right? So without having a registration, right, COR certificate, you cannot do any non-banking finance or any housing finance activity. Okay. Then 16C, right? 16C, it was CIC. Right, so what does it say? Whether the company fulfills the criteria of being a CIC, core investment company, which is acquiring shares, securities, debentures of a particular group of companies. And if it is an exempted or an unregistered CIC, whether it continues to fulfill such criteria. Right, so if you are a registered CIC, do you fulfill the criteria of being a registered CIC? If you are an exempted or an unregistered CIC, whether you continue to fulfill that criteria. That means you do not have access to public funds. In the future also you won't have access to public funds. You've passed a board resolution. Then you have not made any investments overseas. And then after that we also looked into what is a core investment company, right? What is core investment? At least 90% of the investment is in the group. Out of that, at least 60% of the investment is into the equity and the compulsory convertible shares, right? Then it says it does not do any trading other than the block sale and carrying out no other financial activity, right? So that's the definition of the core investment company. So one of your exams, they asked, okay, what is a core investment company and what are the reporting requirements in CARO for a core investment company, right? So one, you write down 16C, which is core investment company criteria, right? Core investment company fulfills the criteria. Exempted unregistered CIC, whether that also fulfills the criteria. And then we came to 16D. What does it say? If there are a number of CICs which are part of the group, indicate the total number of CICs which are part of the group, right? Indicate the total number of the CICs, right? So one of of the audit report we saw that there were 17 CICs, core investment companies, which were part of the group. Okay, right. So that was clause 16. A, B, C, D required to be registered, conducted any NBF, HFA without having a registration. Then after that, it says CIC, whether it fulfills the criteria, and the number of CICs which are part of the group. Okay, right. Then we came to clause 17, which was regarding the cash losses. That is, before recording the non-cash expenditure itself, you see that there is a loss in the profit and loss account, right? So what is the reporting requirement? Whether the company has incurred the cash losses in the financial year and in the immediately preceding financial year, right? So cash losses, you have to state the amount of the cash loss in the financial year and in the immediately preceding financial year. And qualifications in audit report, are they to be given effect to? While calculating the cash losses, are qualifications in the audit report of current year and previous year to be given effect to? Yes, right. Qualifications in the audit report are to be given effect to, right. So whenever clause 17 is coming, that there is a cash loss, then also that brings an indication of the SA 570 going concern, the material uncertainty related to the going concern, right. So they could be coming together. Right, that was clause 17, which was regarding the cash losses. Then we came to the clause 18, which is regarding the resignation of the statutory auditor. So where there has been any resignation of the statutory auditor, whether the incoming auditor has taken into consideration the IOC. What is IOC? The issues, objections, and concerns raised by the outgoing auditor. Right, so what did we say? Incoming auditor, you need to take NOC. Otherwise, you will be guilty of professional misconduct under 811. And now incoming auditor, if outgoing auditor has resigned, then you need to look into the IOC, the issues, objections, and concerns which have been raised by the outgoing auditor. Right? You can again check the resignation letter, the ADT3 which has been filed with company ROC by the outgoing auditor. Right, so that is regarding the resignation of the statutory auditors, whether the incoming auditor has taken into consideration the IOC, the issues, objections, and concerns raised by the outgoing auditors. Okay, right, then we came to clause 19, which was regarding the material uncertainty regarding the ability to meet the liabilities. That means 1 year liquidity check and a foreseeable future, whether they have enough of money, they will be able to generate enough money that they will be able to meet their liabilities which will fall due within next 1 year from the balance sheet date. How do you check that? It says on the basis of 5 things. On the basis of the correct financial ratios, then aging and expected date of realization of the financial assets and the payment of the financial liabilities. Then the auditor's knowledge of the board of directors, right? The management plan and the other information accompanying the financial statements. Whether the auditor is of the opinion that as on the date of the audit report, no material uncertainty exists, that the company is capable of meeting its liabilities as and when they fall due within a period of 1 year from the balance sheet date, right? Like next 1 year, whatever liabilities we will have, we will be able to generate enough money to pay off those liabilities. Simple language, 1 year liquidity check, right? So like we saw in case of Vodafone Idea, SpiceJet, they said no, they may not be the capable of meeting their liabilities, right? They may not be capable. Whereas Reliance Industries, what did we say? That there is no material uncertainty, that the company is not capable of meeting its liabilities. So there it was a type of a negative assurance given under the clause 19, right? So whenever a question is coming in your exams, like say regarding fraud, and let's say the question is coming in the exam regarding the fraud, then we always need to refer to SA 240, then we need to refer to 143.12 if the fraud is 1 crore or above, duty to report to the central government, and you need to refer to clause 11 of the CARO. Right, you remember SA 240, then 143.12, and then clause 11 of the CARO, 11 ABC. Now, whenever the question is regarding the going concern, there is a material uncertainty related to the going concern. One, you will make a reference to SA 570. Second, you will make a reference to clause 17 of CARO, whether there are any cash losses. Then you will make a reference to clause 19, whether there is any material uncertainty regarding the ability to meet the liabilities. And then also 143.3F. right? Any observations or comments which have an adverse effect on the functioning of the company. Right, so whenever going concern question comes, give all this tadka to your answer, and give all this seasoning, right, add it to your answer. SA 570, cash losses, then material uncertainty, and then the 143.3F. Right, I hope you understand what I discussed. Right, so that was clause 19, which is regarding the material uncertainty regarding the ability to meet the liabilities. Okay, then we came to clause 20, which is regarding the CSR activities. 20A, 20B. Other than ongoing project, whether it has been transferred to the CSR fund within 6 months of the expiry of the financial year and related to ongoing projects, has it been transferred to a CSR account within 30 days from the end of the financial year. Right, so that is what the auditor needs to report, that whether the transfers have been done within the due date. Right, so that is the clause 20, which is regarding the CSR. And then we said for standalone financial statements, clause 1 to 20 of CARO is applicable, whereas for consolidated financial statements, the clause 21 of the CARO is applicable. And what is clause 21? It is a merger of all the clause 1 to 20, right? Whether any qualifications or adverse remarks have been observed in the audit report of the companies which are included in the consolidated financial statements. If yes, then indicate the paragraph number and the name of the company where the CARO qualification or adverse remark is there. Right? So you have to make a summary. Okay, name of the company, whether it's parent, subsidiary, associate, joint venture, and then you need to mention the paragraph number of the CARO where there is a qualification or an adverse remark. Right? So if there is no qualification, adverse remark, like we saw in case of Reliance, then you say there is nothing to report. There are no observations or the qualifications, no adverse remarks. Okay, so that was the clause 21, which was regarding the qualification, adverse remarks in the reports of the companies which are to be included in the consolidated financial statements. Right, so can you give me like a reasonable assurance now that ma'am, we will never forget the clauses of CARO? Ethics, I don't know what you have done with it. Right, so ethics also all good and CARO also all good, right? All the clauses of CARO you will remember. What are the reporting requirements? What are the audit procedures? What is the verification? Then how you do the reporting for the same? Right, so starting with, property, plant, equipment, intangible assets, then inventory, working capital, then LIGS, loans, investments, guarantee securities, again, loans, investments, guarantee securities, then public deposits, then the cost records, then statutory dues, then undisclosed income, repayments, and then the issue proceeds. That is clause 1 to 10. Then 11, fraud. 12, Nidhi company. 13, related parties. 14, internal audit. 15, non-cash transactions. 16, registration with RBI and the NBFCs. Then 17, right, cash losses. 18, resignation of the statutory auditors. 19, material uncertainty regarding the ability to meet the liabilities. Then 20 is regarding the CSR and 21 is regarding the consolidated financial statements. Okay, right, it's regarding the consolidated financial statements, right? So with that, what we have completed so far in the 20 days of our class is what? Like we have completed with the entire chapter of the ethics. We've completed with 23 standards, mainly the audit report also we've covered over there, right? And then after that, we've also seen the section 143, the duties of the company auditor, and then also the reporting requirements under the CARO 2020, right? So like we can say more or less we are done with, 50% of the syllabus, and now we come to the other 50% over there. Okay, right? And in that other 50%, we started with the chapter number 1, which was regarding the quality control, right? Quality control. So we had 2 standards to be discussed. One is the SQC 1 and second is the SA 220. What is the title of SQC 1? Quality control for firm, means the standard is applicable to the entire CA firm, all CA firm, right? That perform the audits and reviews of historical financial information. So audit review, postmortem of historical financial information, and other assurance and related services engagement, right? So whatever be the type of engagement that you are performing, you always have to maintain the quality, right? So that is the quality control standard applicable to the entire firm. And obviously, if your entire firm, there has to be quality. Each and every audit that you do, there has to be quality in the audit. Audit means statutory audit over here, right? So for that, we have SA 220, quality control for an audit of the financial statements. Okay. And then we just said, कि client के यहाँ, and the company to where I go for audit, yes, the auditee, there has to be an internal control system. And we said SA 315 talks about the 5 components of the internal control system. And a design, implementation, maintenance is the responsibility of the management. And what are the 5 components? It is the correct charism, right? The control environment, risk assessment, information system and communication, the control activities and the monitoring. This has to be there. Like one of the students had said, right, which company you would like to audit. So you had said, Tata Motors, right? So that is the at the client place. And then at the audit firm, in the CA firm, which is doing the audit, there has to be a quality control system. Right, there has to be a quality control system. And then we discussed what are the elements of this quality control system, right? What are the elements of this quality control system? Exactly, right? What are the elements? LEAHEM. LEAHEM, 6 elements of the quality control system. L standing for leadership responsibility for quality within the firm. E, ethical requirements including independence. A, acceptance continuance of client relationship. H, human resources. E, engagement performance. And M is the monitoring. Right, M is the monitoring, right? So these are the 6 elements of the quality control system. Okay, why SQC1? Why I just can't do the audit as I want, and why all this quality control and all of that, right? Why there is a quality control standard? So that I don't do the work as I wish, but I do the work as per the, you remember I told you some 4 letters over there, that we do the work as per the, yes, as per the PSLR. What is PSLR? Professional standards and the legal regulatory requirements. Right, that you don't do the work as you feel like or as you want. No, you do the work as per the professional standards and also abiding by the requirements of the laws and regulations. And what is your ultimate deliverable after any engagement? It is the report that you issue. So how your report should be? You remember I had said Uchit, right? So the report issued should be appropriate in the circumstances, right? So the report issued should be appropriate in the circumstances, right? So these are the 2 objectives of SQC1. One, that the firm complies with the PSLR, professional standards, legal regulatory requirement. And second, the deliverables, that is the reports issued by the firm, are they appropriate in these circumstances? These are the 2 objectives which are to be achieved by SQC1. Okay, and then after that we started with the first one, that is the leadership responsibility for quality within the firm. Right, so leader, who should be made the leader? First year article, who I told you is like a sheep. Right, first year article, should he be made the leader for the purpose of SQC1? No, the responsibility should be given to the experienced and able person in the firm, right? So what did we say? CEO, managing partner, senior most partner of the firm. They should be made the leader for the purpose of SQC1. And then it is their responsibility to ensure that all the firm and the personnel comply with the requirements of the SQC1. That they get designed policies and procedures to ensure compliance with the requirement of the SQC1. Right? It is communicated to all firm personnel by dialogue, training, seminars, and so. Right? So that is one, the leadership responsibility. Okay, somebody in the firm has to take the onus, has to take the responsibility. Okay, tomorrow if it is found out, okay, oh, our firm has not complied with SQC1, who will you held responsible for that? Or who is responsible to ensure that the firm complies with the requirement of SQC1? Right? So first is the leadership responsibility. Right? We are talking about quality control system. System means there should be policies and procedures. System है, मतलब क्या है? SOP है. SOP means standard operating procedures. Right. So whenever you have to perform any engagement, next one, there should be policies and procedures in the firm to ensure whether you can comply with the ethical requirements, including the independence. You say, I can't comply with the ethical requirements. It says, please don't do the audit. Right? It again, what does it say? It is non-negotiable. Right? It is compulsory that auditor, CA, whenever you're performing an engagement, you comply with the ethical requirements. Those being integrity, objectivity, PCDC, that is your professional competence and due care, confidentiality, and the professional behavior. And independence not only of the mind, but also the independence of the appearance. And in case if they have identified any threats to the independence of the auditor, then how they address those threats, what safeguards are put to reduce the threat to an acceptable level. And if you cannot reduce or eliminate the threat, then what does it say? Bye bye. Then you need to withdraw from the engagement, right? Because independence requirement is non-negotiable. And at least annually, at least once in a year, you have to take a declaration from all your firm personnel that they have complied with the requirement of the independence. Okay, so that was the E. Right, so LEAHEM. So we discussed L, that is leadership responsibility. Then E, that is ethical requirements including independence. And then we started with our discussion regarding the A. What was the A? The acceptance and continuance of the client relationships and engagement. Right, so acceptance for a new client and continuance for an existing client, that whether I should accept this new client, or second, whether I'm already doing this engagement, but should I continue with this engagement or should I withdraw from the engagement? Right, so there what did we say? Now when you have to check for acceptance, continuance of client relationship, again there have to be policies and procedures in your firm. Remember, everywhere what there has to be the policies and procedures. And now there should be policies and procedures in your firm to identify, to check for the, like what is the first ethical requirement for a CA? That he should be a person of integrity. Exactly. So same thing, we say client, same pinch. If you want that your CA should be a person of integrity, even we want that our client should be a person of integrity. Right? So how will I come to know about the integrity of my clients? Right? How do I come to know about the integrity of my client? Right? Should be my, yes, without bias to any religion. Should my client be like, Lord Rama or something? Right? Having very good, reputation, having very good attitude, right? Then also you look into the nature of the client's business and operation. Then they should not be involved in any money laundering or any criminal activities, right? Then are they trying to keep your audit fee as low as possible? Why they are so interested in appointing you, and why they want to not reappoint the existing firm, right? Why they want to change the auditor? Right? And also your information, your knowledge regarding the integrity of the client will increase with your ongoing relationship with the client. So as and when you serve the client, more and more you will get information regarding their integrity or their lack of integrity. Right? So this is up to where we have discussed so far. So now we